Okay, just picture this for a second. What if a sitting US president became the face of a huge, super controversial crypto project? You know, one that mixes decentralized finance with raw political power. It sounds like something out of a sci-fi movie, but it actually happened. So let's dive in and unpack this whole thing.
I mean, really? A sitting president's own cryptocurrency? It's a wild question, but it's not a hypothetical. This is the reality we're digging into. The project is called World Liberty Financial, WLFI for short. And yeah, it's backed by none other than President Donald Trump.
So as you can imagine, this whole thing has investors intrigued, analysts are completely divided, and regulators are, well, they're pretty worried. It's really the heart of the story. Is this some kind of revolutionary financial tool, or is it something else? To even start to figure that out, we've got to look at the official story first.
All right, let's get into it. Section 1, the official story. So on the surface, what is World Liberty Financial supposed to be? Okay, so here's the pitch. World Liberty Financial, or WLFI, was launched back in 2023 by Donald Trump and his sons. They're selling it as this decentralized finance protocol that's all about defending financial freedom. The big idea is to strengthen the US dollar's place in the new digital world and create an alternative to those central bank digital currencies. And, you know, on the surface, it sounds pretty patriotic, right? Kind of innovative. But the reality, well, it's a lot more complicated.
And that brings us right to our next big question. Is this really decentralized, or is it a disguised empire? You see, decentralized is the magic word in crypto. It's supposed to mean power is spread out. You know, no one person is in charge. But with WLFI, that definition gets real blurry real fast.
I mean, look at this. The theory, the dream they're selling, is this decentralized utopia where the community of token holders gets to vote and shape the future. But the reality? It's not that. In reality, the Trump family and their inner circle hold the key tokens, which means they can pretty much make decisions on their own. And get this, the founders took home 75% of the pre-sale revenue. That doesn't exactly scream community run, does it?
And let's break those numbers down a bit more, because it's pretty wild. You've got the public pre-sale at 25%. But then, look here, somewhere around 22 to 25% of the entire supply of 100 billion tokens went directly to the Trump family and their associates. When you have that kind of concentration of tokens, you have a concentration of power. Simple as that.
And if the token allocation wasn't enough to make you raise an eyebrow, how about this number? 60%. 60% of all ongoing revenue generated by this protocol goes straight to the Trump dynasty. So it really makes you ask the question, right? Is this whole thing about decentralizing finance for the people, or is it about centralizing profit for a few? Okay, so the structure of the project raised some serious questions. But the launch itself? That's when the alarm bells really started ringing. Let's talk about that, because it was a chaotic and contested launch, to say the least.
Man, this pre-sale was just a complete roller coaster. Look at this timeline. In late 2024, it just stalls for weeks, even after the election win. Then boom, January 19th, 2025, the first part suddenly fills up, raising $300 million, apparently spurred on by a meme coin. The very next day, on Inauguration Day, a second, more expensive tranche opens up, but that one took 53 days to finally close. The token didn't even officially launch until September. The whole thing was just erratic, full of these really strange, dramatic swings.
And if you were a small-time investor just trying to get in on this, it was an absolute nightmare. The site was crashing all the time, transactions were getting blocked for hours, and all over social media, people were screaming that big money whale wallets were getting special treatment, while the little guy was getting totally locked out by all these technical problems.
This really says it all. The final results were spectacular on paper, but the reality was much more chaotic. I mean, yeah, they raised over $500 million. That looks amazing, right? A huge success. But that big number just completely papers over how messy, frustrating, and for a lot of people, deeply unfair the whole process really was.
And the chaos didn't stop once the token launched. Nope.
The value is almost immediately cut in half. And then, and this is a big one, the protocol itself froze assets on an exchange linked to the major investor Justin Sun. That was a move that sent shockwaves through the market, and it was pretty much undeniable proof of just how centralized the control really was.
Okay, so we've got the token, the wild price swings, all the pre-sale drama, but what if that's all just the opening act? What if the real story, the hidden face of this project, is something way less flashy, but a whole lot more powerful? So let's just ask the question, what if the WLFI governance token is just a distraction? What if the whole point of it is to keep our eyes over here while the real strategic asset, the real core of the project, is somewhere else entirely? This is where USD1 comes in. It's what's called a stablecoin, launched by the project in March 2025. Now, if you're not familiar, a stablecoin is a type of crypto that's designed to always be worth $1. It stays stable because it's backed by actual real-world assets. In this case, things like US Treasury bonds and cash. It's kind of the boring, reliable part of the whole ecosystem.
And while the WLFI token was on that crazy price roller coaster we talked about, this boring stablecoin was quietly taking over. Its market cap grew to $2.6 billion within just a few months of its launch. That made it one of the biggest new stablecoins on the market. Wildly successful.
So, why is this so important? Well, for one, USD1 is being used for huge transactions, like a $2 billion investment in Binance. It has real-world utility. But here's the kicker. Those treasury bonds it holds as reserves, they generate interest. This creates a constant, passive revenue stream for the whole protocol. It's kind of like a digital rent. Basically, USD1 is the powerful foundational engine, and the volatile WFI token is just along for the ride.
All right, this brings us to the real plan. We have the flashy, speculative WLFUI token on one side and the quiet, cash-generating USD1 stablecoin on the other. So how do these two parts actually fit together? This is where it all clicks.
It's all about a really powerful financial feedback loop. And depending on how you look at it, it's either genius or pretty dangerous. So here's how it works. Step 1. People use USD1 so its reserves get bigger. Step 2. Those reserves, held in treasury bonds, make money from interest. Step 3. They take a chunk of that income and use it to buy back WLFI tokens from the open market. And then they burn them, basically destroying them forever. Step 4. This makes the remaining WLFI tokens more scarce, which is designed to push up the price. So the bottom line is, the success of the boring stablecoin directly benefits the biggest holders of the exciting governance token.
And well, it seems to be working. This entire strategy has led to a huge shift in the Trump family's wealth. I mean, look at this. Their real estate empire is estimated at around $3 billion. Their crypto assets, around $12 billion. We're not talking about a little side project here. This has become the new core of their entire financial dynasty.
So, what's the takeaway here? Well, there are really two completely different ways to view this whole thing. On one hand, you have supporters who see it as patriotic innovation, a way to secure the dollar's future using new tech, defending financial freedom. But on the other hand, you have critics who see it as a really dangerous privatization of money. They say it puts incredible monetary power into one family's hands, creates massive conflicts of interest, basically an empire built on a presidential seal.
At the end of the day, this is so much bigger than just another crypto project. What we're really looking at is a fusion of the most powerful political office in the world with a private and very powerful financial machine. And it leaves all of us with a pretty massive question to think about. What happens when the world's most powerful person can print their own dollar?